friends, this is Link technical analysis. Chainlink versus Bitcoin, Chainlink versus the US dollar, Chainlink versus Ethereum. We'll do all three in this episode real quick. Now, of course, thank you so much for tuning in. Really do appreciate you spending your time with me here as you conduct your journey towards becoming a self-reliant, independent, profitable, consistent trader. Wouldn't that be wonderful? Well, you've come to the right place for it. If you're new here, hit that subscribe button. I just want to as well say to people that what I'm doing right now, by the way, is recording this episode and live in the Discord. If you want to, you could listen along and get the audio on the go as well. Audio only, if you like, in this here as I put this out. You can see this green circle around me. Stop speaking. Goes away. Hello. This is going out live for people if you want to listen in. Of course, nobody's actually doing that right now, but I decided I would. And why did I do that? Well, because I did the Bitcoin giveaway. Check out the Bitcoin video if you want to see who won that. And yeah, cool. So we did that. And I wanted it to be verifiable, whatever. So, right, what have we got on the go here? Small term time frames, just jump down a bit, hide all the drawings so I can just kind of point this out real quick. We have this topping type formation for us after this rise up the way. Well, we've got, actually the 4 hour would probably be better to look at that one, where we had a slight Adam and Eve type pattern here. As a result of this, moving down below the 21 EMA and the 55 EMA, the crucial 55 EMA point here, right at the neckline of this, we've had a retracement in the prices, which matches in more or less with what we could have expected in terms of a measured move off the back of that head and shoulder, Adam and Eve, basically the same sort of concept as the head and shoulders. But we also have this, which is a big old descending wedge on the go, as this denoted quite clearly with the divergence that we saw here on the MACD down below. And then we've got a retest of this area. Is this still just retesting it? It is. It hasn't really broken back into it really, strictly speaking, quite yet. Because, of course, if you just let me take this full screen and balance it out a wee bit, really, it's always debatable when I draw these in. I always do it debatable style so that that there's a subjective nature to it. It's all, that this is a retest of this zone right now. We want to see the prices stay above the 50 simple moving average here on the 4 hour time frame to maintain a bullish structure, or else we could be looking down. Of course, in terms of a crucial key inflection point for us, we're still going to remain looking at that 87k area. Tune into previous episodes to get more explanation about why, and looking towards an upside potential. What we want to see happen is the 93,000 area be taken out for this, so we get a 236, a proper 236, and then go up towards doing the 382. Now, looking at this thing, you could say that there is the potential for some, a Fibonacci going up this way, and looking at having come down past the 382 on this one, or the 236 and the 382. What's actually happened here is on the 4 p.m. candle on the 29th of September yesterday, we saw a turnaround in the prices at the 50%, which is a common area for things to turn around at, giving you that possibility of things kind of, reinstating that upward nature. We're quite close to 93k, where we could take out that 236. Things could get positive again. Profit taking targets exist above us. Of course, where we have these two crossing currently 21 EMA over the 55, which is a negative in and of itself, but they would uncross fairly quickly as they uncrossed here after having crossed positively, so that could happen again, twisting around each other. We've got a little bit of chop on the go. If I bring up the oscillators down below, you can see that what we actually have here as well is the ADX being above 25. Okay, so this is still negative. What we had, it kind of dropped down below 20 here. Actually, no, not above 25, above 20. What we had was it dropping down below 20 just as they were crossing here in this area. So we have to be judicious about this, and remember to take profits wisely if you're shorting it off the back of this thing, because what we really want to see is above 25. But we're in crypto land here. 20 is okie dokie, absolutely fine for this thing, and that's where we are right now. We could see this turn around. If it drops any lower, then we're going back into chop. We feel like that we could see that happening. If we go down to 87k, we could feel like we're back in sort of chop territory. Things could go then either way thereafter. Not really trending, but we are kind of still sort of trending towards the downside. Let's see if we can bust out past that. 2 measured moves off the back of this wedge, of course, take us up towards the 618 golden pocket zone, way up above the 100k, looking at 40% profit taking targets, loads of good stuff. Movements down back past these two zones here would be us back inside this wedge. We could even be looking down at 65k. Again, you're looking at a percentage potential here of us solid 30% on either direction, 30 to 40% in terms of moves of this thing. Now, how does that all time together with the dollar pricing? Well, we can see that we're actually below, sorry, as I kick the table, below $10 again on this one, having done the same head and shoulders, or sorry, Adam and Eve pattern here on this 4-hour time frame. Again, rejected by the 55 and the 21 here, having crossed down below them. We saw that negativity. Again, we're being supported by the 50 simple moving average here. We've got the 55 above our heads as well. Then the story is a bit clearer in terms of this, because what we've seen with Bitcoin is it's the difference that with the volatility, the doubled down volatility that you get naturally, not implied, realized whenever you're trading two volatile assets against each other. Whereas over here, what you've got is versus the stable coin of the dollar, and what you see is this ADX going properly down into chop here. So that's that same story, but with a bit of a clearer heartbeat for us to kind of measure. Staying above 50 simple would be good for us. Let's see if these things can cross. We do have convergence between these lows, if you're looking at it that way round here on this on the MACD down below. Likewise over here on the MACD with regards to this. But the main story really is in terms of the broader picture, which is the 24-hour time frame, where you can see that we've got a bit of bullish divergence between these lows over here on the MACD, not on any of the other ones. And we do have a crossing of the ADX line over the DMI. Well, just kind of going down below 25 really is kind of what we're looking at there on that one. It's negatively stanced though at the minute, still remains the case until such times as we see something change. This is a negative trend that we're in for Link, okay, until such times as something changes. Dollar prices more or less speaking for themselves. I would highly encourage you to watch yesterday's episode really to take advantage of that. We also talked about the monthly in yesterday's video, so I'm not going to go on about it too much today, other than to say that this has been a negative candle. Movements down below this area next month, below $7.50 next month would be very, very negative for the prices, and overall could see further downside of potentially another 50% reduction in prices, potentially, or 30% I'd say actually. But we've done a retest of various moving averages that we kind of would have liked to have seen happen, such as they're not on there. I'm gonna have to just bring it up by doing this. The 9, bang on there with this 9 retest. Okay, so we've done that in terms of the monthly. So it's been an okay month for us and everything's gone well. Really overall, despite the fact that we've had this retracement, has been very, very healthy for the market to have had it in a sense because of this massive move towards the top side. But we're at that zone where healthy turns to unhealthy quite quickly, just like whenever you're at the top end of your BMI. So moving over to, there's plenty of Fibonacci's and everything we've discussed in recent time. I'm not going to talk about it here today. Watch yesterday's episode for much more clarity. Again, watch the Bitcoin episode for who won that competition if you're interested in knowing, which I'm sure you are. Keep saying Rocky, you rock, though. I really do appreciate it. Key areas for us, of the 0.021, if we'd move down below that, I'll just remove this little green line. I don't need it on here, or this one. Talking about all this sort of stuff in terms of the smaller term time frames, 24-hour time frame. You can see this fallen wedge that we've got. We didn't make it outside of that zone. We have pushed down past this key area that we spoke about in yesterday's episode, but we have been supported by the 144 exponential moving average here on the daily time frame. Can we see this find its feet here? Is this position slightly wrongly? Do we need to use wicks and that body just there and kind of just ask some questions? We need to see how this turns out, but if we do move down the way, quite negative. Okay, so be warned. Forewarned is forearmed. Kevin did a really good job taking profit back up there. I hope a lot of other people watching did as well. Movements down the way, of course, you could be looking down as far as 21. Big chunks down in terms of percentages. Of course, in terms of percentage moves, if we did move down the way, any of this stuff is crazy in terms of profit making if you were shorting it. But I would happily look towards the 200 simple and 233 exponential for a potential bounce area for us, because we could be putting in a higher low overall on that one and really shaping up for this wedge to be more wedge-tastic even than it was before, if we have that sort of a scenario evolve for us overall on the go. But key area is going to be in there at that 22, 21, 0.022 area. Okay, that's going to do for us in terms of Link. I'm just going to keep this one really, really short. Thanks so much for tuning in. What we have, by the way, what we have here as well is Chop over here. Same story. less erratic, but same story. A turnaround on the stochastics. It's crossed over, going towards the downside. RSI potentially finding support on the EMA, but we've gone past this swing failure zone, so that's obviously crucial importance for us. It's very much a negative picture overall, but we have the possibility of this simply turning out to be a retest and us going towards the top side thereafter. There's your bullish and your negative case, bearish case for you in terms of this asset, and that applies across the board with these things, depending on how you're looking at it, of course. I draw these things in subjectively on purpose every time to demonstrate that nature to you. Retest there with this 144, things could work out to be quite good in terms of an entry. Certainly gives you low risk management, and this is what we talk about. This is why it's better to be a trader than a hodler anytime, really, is because of these things. So yes, good stuff. Catch you next time. Thanks so much for tuning in. Really do appreciate it. By the way, if you get value from these episodes, hit that subscribe button. That would be awesome. I'll see you next month. Tomorrow. Cool. Let's see, is anybody in the Neverland text thing? By the way, I'm doing these episodes as I film them. I'm just broadcasting it live to people over on the Discord for audio only. And I did the Bitcoin giveaway there that way so that people could verify that it was real and all that good stuff. Don't know if I'll bother doing that next time I do a giveaway since nobody actually tuned in, but I did it. And yeah, cool. Catch you next time. See ya.